let's delve into the overall market right now. Andrew Dittberner, Senior Investment Manager at Cannon Asset Managers, joining us. Thanks for joining us, Andrew.
Thank you.
Let's talk about this new gold company. I mean, what are your thoughts on it and the investment case that lies therein? Because yes, there are a lot of issues that it's had to face. But of course, it is highly cash generative, and that's of course one of the positives that everyone wants to point out.
Yeah, I think something that will attract local investors is definitely that potential yield that you could see coming from it. I think under the right conditions, I think it could do exceptionally well. Right conditions being a weaker rand and a stronger gold price. I think if the company
what do you mean by those levels? Weaker from here on out? Because the gold price has been under pressure, but the rand has been weak.
I think at these levels, I think it can do exceptionally well. I don't think the rand needs to go weak or the gold price needs to go stronger. I think if they work in the opposite direction, it's going to be difficult, not just for the new company, but for all the gold companies in South Africa at the moment. So yeah, it's going to be very interesting to see what happens next week when foreign investors or the Goldfield investors receive their shares. I think that takes place on Monday. What the foreign investors do with the shares, whether they offload them or hold on to them, I think will be quite interesting to see.
Yeah.
Goldfields are apparently de-South Africanizing their operations, hence selling off these assets. It's surprising to see, well, not surprising, it's interesting to see that they've kept South Deep, and hence the majority of their reserves sit in South Africa still. So I'm not sure whether that argument holds much credence. Then again, KDC and Beatrix, which are the mines that Sibanye holds now, they've got all the same ongoing arguments. Old mines, deep mines, expensive to run. So it's going to be interesting to see what happens going forward.
But I think also it is a case of mines that aren't deep level and mines that are deep level. And there's a different type of mining that takes place in the goldfields now, the new goldfields versus the Sibanye gold.
Yeah, exactly. I think they've obviously reduced their costs, or that's what they're trying to do. We don't hold goldfields at this stage, and we obviously don't hold Sibanye, given that it was only listed today. So yeah, what happens going forward with both companies, not too sure. It'll be interesting to watch it play out.
Well, let's stay in the resource space, because Implat's falling today on the back of that trading update. We know the results are out on Thursday. Profits likely there to plunge as much as 80%. I mean, that's a huge drop off. The market's slightly scared by that. But where the stock is trading right now, I mean, from a valuation perspective, is it attractive at all?
I think it's attractive. I think the platinum industry as a whole is looking quite attractive.
On paper? On
paper, exactly. They've done quite well since the lows of July, August. I think Implats has done around 25% since then. So if you really wanted to take advantage, you're probably a bit late. But I think there's still quite a bit of value to be had there. If you look at it through the cycle, PE ratio, for example.
And just remind us what that is.
It's looking at earnings over the past 5 to 7 years and adding back inflation and taking the average. It kind of gives you a through the cycle look what these companies can do. Obviously the earnings have been hammered because of what's happened over the past year. So when you look at a trailing 12-month PE, they look quite expensive. I think Implats trades at about 25 times. But if you look at what it can produce through the cycle, they look very attractive. And I think that's what you've got to be looking at the moment. And I think Implats has fantastic management. It has good assets. I think there's quite an easy case to make for holding some of the platinum.
Interesting view there, but you're a deep value investor, so going for that position. What about ArcelorMittal, staying of course in the value space? Saying today that they've had that fire at Vanderbijl Park, they could be declaring force majeure in South Africa. That of course has an impact on the country if that is prolonged when it comes to the steel industry. But ArcelorMittal, I mean, this is just another piece of bad news.
Yeah, I mean, they've just had a tough time of it over the past 2 to 3 years. They've had cold furnaces, Shashen iron ore, infrastructure spend's not coming through, hence construction companies are doing poorly. So, I mean, it's just bad news after bad news for these guys, and you've seen it coming through in the multiples at the moment. So if you're looking for a contrarian stock, I think this is definitely.
What needs to change though at ArcelorMittal?
Jeez, that's very difficult to say. I mean, ArcelorMittal, if you look at the company globally, there's exceptional management there. These guys have good assets in South Africa. I think if they can get these assets working for them, if this infrastructure spend comes through, I don't think China's going into recession, so there's going to be demand for steel globally. I think if they get that right, if their management team can get that right, I think we could see this company re-rating. At the moment, it's trading at single-digit PEs. It's exceptionally attractive if you're willing to take on that risk.
Yeah, but as you say, questions raised perhaps about management strategy, decisions that have been taken. Let's move on. Holdsport, trading update, 5 months ended January. The sales were up 11.2%. New to the markets, so we're getting used to the kind of numbers that come through from this company. Were those good enough?
I think those numbers were very nice. This is a company that hasn't really benefited from the retail boom that we've seen over the past year. These guys sell in-house brands, which are generally seen as low quality if you look at some of your food producers. However, their in-house brands aren't that. They sell them in their competitors. The First Ascent brand, Cape Storm brand, are doing very well. I think going forward on a PE of 11 times, this is exceptionally attractive when you look at a company like Mr. Price, which would be a competitor, or you could see it as a competitor. I think if you're wanting to get into the soft retail space, Holdsport would be a nice entry point.
Now, I wonder what the whole story is around Cipla today, because it seems that Indian newspapers are reporting that they put that deal on hold, the 51% buyout of Cipla South Africa, perhaps looking at other opportunities in the market, re-evaluating that deal. It seems that Cipla South Africa not wanting to comment on that. What would you do if you were holding the stock right now and having bought it on the fact that this deal could come through?
Yeah, I don't think that's an investment. I don't think you should be buying a share based on what might happen or proposed acquisition. I think at the moment you're looking at some pretty poor communication. I think, Cipla India have said that they haven't, that Cipla South Africa haven't accepted the bid. Cipla South Africa are saying they haven't received an official offer from Cipla India. So it seems to be a bit of issues around communication between the two companies. The bid, or the so-called bid that's on offer at the moment of R8.55, I think that's a bit cheeky. I think specifically given the new contract that they've just been awarded. I think
with government for antiretrovirals.
Exactly, that's it. I think this company should be trading, or an offer should come in well in excess of R8.50, what they offered at the moment. So hence we've seen the share trading at about R9.50 because that offer was expected to be revised. Now it's apparently off the table. We saw the share come back quite a bit today. I think Cipla at the current price looks about fairly valued.